The Crypto Markets Update is brought to you by KuCoin, the best place to find the next crypto gem. All right, joining us now to discuss the crypto markets is Umee founder and CEO Brent Xu. Welcome to the show, Brent. So we're having a pretty good day today, but like the markets have had a tumultuous time. They're more stabilized now with Bitcoin. Where do you see the DeFi industry headed now? That's your specialty. Is there still a lot of activity, or has there been a chilling effect?
Yeah, absolutely. So we're noticing the Bitcoin price action and just how the space is evolving. Speculation drives innovation, innovation drives speculation when it comes to crypto assets. So right now the biggest concept is inflation. So we saw the highest levels of inflation in the last 40 years. And this has resulted in central banks around the world, increasing interest rates pretty aggressively throughout the last, several months. With the DeFi space, this is forcing DeFi to essentially develop new ideas and build new innovations and products that can basically revolutionize how we look at the broader traditional debt markets. So that's kind of what we're focusing on in the Umee ecosystem.
All right. Miller?
Brent, I think that one could say traditional financial markets are at a moment of extreme agitation. And one thesis is that crypto is a leading indicator of traditional financial markets. Do you prescribe to that idea?
So I would look at it this way. Let's look at the 08 debt crisis. We saw close to $50 trillion of value disappear in a matter of 2 years. But the truth of the matter is that was actually happening over 30 years. Ever since the first issuance of the mortgage-backed security back in 1984, you saw layering of bad debt practices, rehypothecation, just not effective mechanisms for transferring value. But if you look at this recent debt crisis in crypto, Three Arrows, BlockFi, Voyager, Volt, Celsius, all of these situations where you saw like a dramatic decrease in value. The silver lining is that this occurred in like a 3 to 4 month period. These markets were able to default. And the reason for that is because crypto is so transparent, crypto is open source, and crypto is an open ecosystem where you can actually get a sense on what's happening in the public markets. And in that sense, crypto and Web3 and blockchain really is a leading indicator of what we can expect technology to look like as we progress into the future of this whole fintech ecosystem.
So Brent, you're a speaker here at I.D.E.A.S. We're excited to hear your panel, and it's all about evaluating debt markets and DeFi. Maybe you can explain some of your thesis here.
Absolutely. So in order for this debt capital market ecosystem in crypto to evolve and effectively be useful for the broader economic environment, first you need debt fundamentals. For example, you need a yield curve. You need a term structure of interest rates to be able to measure opportunity costs and time value of crypto assets. When you build something like this, you can onboard the broader credit markets. You can onboard the broader fixed income markets. Eventually, we need a metric to understand time value of Ethereum, time value of Bitcoin, time value of I.D.E.A., USDC, Tether, time value of a MKR token. And once you have those foundations, you will see broad levels of adoption of this space alongside new technological infrastructure for things such as cross-chain interoperability, scalability, as well as privacy.
You were in TradFi in a past life. What benefits do DeFi financial rails promise over traditional financial rails?
So crypto has a very powerful product. Think of it this way. Proof of stake is one of the biggest innovations to come out of the computational ecosystem in the last 100 years. So think of proof of stake as this internal inflation affiliated with the consensus protocol of a blockchain. In many ways, this is a better hedge against inflation compared to a lot of other things. So, Bitcoin went through this thesis, it was a hedge against inflation. That thesis has been disproven in this current high inflation market with, very high interest rates. Plain vanilla fixed income is also not the best hedge against inflation because as interest rates increase, the price of bonds decrease. But proof of stake, things like Bitcoin mining, this is a good hedge against inflation because you're producing more Bitcoin. Proof of stake consensus, you're also increasing your your access to the assets from this inflation, and effectively you're getting more tokens, which also increase in price with the markets. And so you can make the argument that proof of stake as a great way of measuring a new fundamental way of measuring opportunity costs and how you view different inflation ecosystems.
Are you very bullish on proof of stake coins right now? Are they undervalued?
I am very bullish on proof of stake consensus, and I think that proof of stake is a call option on the future of fintech being able to integrate all of this technology. Think of it this way: if you were able to encapsulate proof of stake in certain term structures, for example, proof of stake rates in 1 month, proof of stake rate in 2 months, 3 months, 6 months, 1 year, 2 year, 12 year, 30 years, you effectively are able to build a yield curve or a staking curve based on proof of stake inflation, and this entire curve can power how we define the future economy of Web3 innovation.
Brent, pivoting a bit, there's been a lot of headlines recently about hacks in the DeFi space, particularly bridges, which I know you work on. Why are bridges so hard, and why is interoperability so in demand?
Right now, a lot of the bridges out there are, not necessarily the best bridges. They're in many ways glorified multi-sigs. They're proof of authority networks that they just act as a blockchain in between two different blockchain networks. I don't think there is a good bridge at the moment. I think the key to bridging is actually not using one of these glorified multi-sigs that we see out there. The key to bridging is using a low-level communication protocol that actually taps into the consensus layer of the blockchain itself and allows you to transfer assets from one blockchain to another. We have something out in the Cosmos ecosystem called IBC. We view IBC as the TCP/IP of crypto. It is the only true layer 0 protocol, and we're here to expand the adoption of IBC to connect all of the blockchain ecosystem.